Hi, my name is Pete. Welcome to my YouTube channel, Game of Life 411, and to today's video, which is part 2 in a series, The Best Investment I Ever Made. In part 1, we talked about the care and feeding of an alligator. That is how Dave Ramsey refers to raw land, because it just lays there and requires constant feeding in terms of property taxes and insurance and things like that. In today's part 2, we're going to talk about how to turn that alligator into a cash cow. Like most of you, I'm not a real estate professional. In fact, my background is in software. So for the last 30 years, while I've been focusing on my career implementing software systems and managing projects, I've also been very interested in real estate, and primarily because I wanted to succeed financially. So I've been investing in all kinds of real estate for that entire period, trying all kinds of different things, and even some things that most people haven't tried. For example, I created my own subdivision, I did a 1031 exchange, and I even donated a large piece of land to a land conservancy. So doing all these things, I've had obviously some successes and some failures. And in this series, I am sharing with you the things that worked the best so that you can learn from my mistakes and hopefully succeed yourself. So this is not rocket science. Again, I'm not a real estate professional. Anyone just living their life, managing their own career and family can do this. So I hope you'll keep watching because this is absolutely something that can work for anyone. This channel is my retirement hobby, and I love helping people win at the game of life like we did. Through my channel and other free resources, I share what worked for us and how to steer clear of stumbling blocks. Take a minute now to invest in your future success by subscribing to my YouTube channel, website, and Facebook group. If you like my content, please share it with at least one other person right now. And check out my other channel, Pete's Hip Vlog, where I'm helping thousands of people recover successfully from total hip replacement. I've made it easy by including links in this video's description. Thanks for watching, and now back to the video. I'm going to go through this in the traditional who, what, when, where, why, and how fashion. So when did we do this? Well, this is the timeline from part 1, which is the alligator. And, at this point, you can fast forward 20 or 25 years, and it looks like we were pretty smart in our investment because we have a piece of land that has appreciated significantly. But I was getting close to retirement, and my wife was nervous about that because this land was a pretty significant part of our net worth, and it just sat there consuming money instead of producing any kind of income or revenue. So I was trying to figure out how to take that raw land and convert it into an income-producing asset, either real estate or the stock market or something like that. And because this was a large piece of raw land that also had some problems, it was not very liquid, but we had found ourselves a buyer. And looking at the alternatives, how would we invest the proceeds? There were not a lot of great options, right? If you looked at vacation rentals or commercial real estate properties or residential real estate properties, they were all at historical highs in terms of cost, and the returns on your investment were at historical lows. So it was not a great time for us to be buying one of these assets, but we were able to make it work. So watch to the end where I'll share the keys to success to making a transaction like this work for you. Because if we can make it work in that environment, you can make it work anytime. What is an alligator and what is a cash cow? As I mentioned earlier, an alligator is a piece of raw land that just kind of sits there and consumes money and resources in terms of property taxes and things like that. That's what Dave Ramsey likes to call them, so I just thought I'd use that term. A cash cow, on the other hand, is an income-producing property, and that's what we wanted to turn this alligator into. If you'd like to know why we bought an alligator in the first place, then please watch part 1 of this video series. How? So how do we do this? Well, initially, I was thinking about converting this into a commercial triple net property because while I didn't know a lot about them, I had heard that they're very easy to manage, and I'd had a lot of headaches with residential real estate. And I didn't really want to do that anymore. So we started off down the path trying to find a partner who could educate us on commercial triple net real estate. The things that were appealing about that were that it should be very low engagement from the owner, and the tenants really are supposed to take care of everything, and they're typically very long leases, so not a lot of headaches. In the end, though, we ended up looking at a variety of different things and weighed the pros and the cons, which I'll go over here in a minute. We looked at just selling the land and investing in the stock market. We looked at buying the commercial triple net property. We looked at buying traditional residential rental real estate, so like apartment buildings or something like that. And then we also looked at vacation rentals at the suggestion of my accountant. As I go through these different options, I'm going to refer to my notes just to make sure that I don't miss anything. Okay, so the first thing that we looked at was the stock market. And by the way, you can kind of mix and match these transactions. You could, for example, take part of the proceeds and invest that in real estate and part of the proceeds and invest that in the stock market. But we decided to go into a single investment just to keep things simple because honestly, over the past 10 years, I'd been spending a significant amount of my effort trying to simplify our finances and our portfolio because earlier in life, I tried everything. So it was fairly complicated. So the stock market and the pros there. Okay, so previous experience. I'd been investing in the stock market for 35 or 40 years, so I knew how that worked. It's a well-known type of investment. There's a high probability of success. It has an excellent return on investment. And if we decided to invest in the stock market, we could control when we put the proceeds from that real estate sale into the stock market. And that was important because the stock market was also at all-time highs. And we might not have wanted to stick all the proceeds into the stock market at one time. So that was a pro in my book. Now, on the con side, stocks are very liquid, which you might consider as a pro, but for me, it's a con because of my personality. And, you have the tendency or there's the risk that you could sell emotionally and at the wrong times. So it actually worked better for me having that raw land for such a long period of time and it being illiquid so that I couldn't make those types of mistakes. So to me, that's a con in terms of the stock market. Also, minimal income, it may require sales. And what I mean by that is you will get some dividends and things like that. But in order to pay our expenses, you don't really get a lot of income from stock market investments. You typically have to sell those securities to generate the money to live your life. And that can be painful for some people. It's not the same type of a scenario. There's no step up in basis for our heirs. So we're not really planning to leave a whole bunch of stuff to our heirs, but it could happen. And if it happens, then with stock market investments, there's no step up in basis. And what that means is if I invest $100,000 in the stock market now, and it's worth $500,000 when I pass it to my heirs, then they're going to have a capital gain of $400,000 that they'll owe taxes on. Whereas with some other investments, there's a step up in basis at death. So my heirs would actually get it with a basis of $500,000 and not have to pay any capital gains taxes. But again, that's with other types of investments, not with stocks. One of the big cons was that we'd have to pay a huge tax bill. Something like 30% would be paid in state and federal taxes on the sale of that land. And if there's one thing I've learned in recent years about myself, it's that I'll do almost anything to avoid paying taxes that I don't have to. So that made this a very unappealing option in my book. And then finally, this would make our portfolio kind of unbalanced, right? We would have most of our net worth in the stock market, as opposed to if we invested in something like real estate, it would be more balanced. Now let's talk about the pros and cons of residential rentals. And that's something I have a lot of experience with. We're talking about, individual homes or duplexes or apartment buildings, things like that. But you're dealing with long-term leases like 1 year, 2 year with individual tenants. Okay, in the pros column, I have previous experience with that. It's a well-known type of investment. There's a high probability of success. There's an excellent return on investment. And if we could do this as a 1031 tax-advantaged exchange, we would also save all of the capital gains when we sold our land and converted it into a rental property. So the way that works is that with a 1031 exchange, which I'll explain in a future video in this series, you basically identify a replacement property. It has to be kind of similar. So you're selling real estate, buying similar real estate. And basically the federal government says, yeah, as long as you follow these rules and follow this timeline, then you don't have to pay any taxes right now. Basically, that is deferred. So your basis from your original property, the land in our case, becomes the basis in your new property. And so ultimately, when you sell that property, you would pay taxes on the entire gain. So it kind of combines it. And then I had distance listed as both a pro and a con for residential rentals because it's a tricky balance to achieve, right? If you have a rental property too close to your home, then it can become something where tenants come and bother you on a regular basis, and it can interfere with your life and become inconvenient. On the other hand, if the property is too far away, then that becomes inconvenient when you have to perform maintenance or just visit the property to make sure everything's okay, or when you're changing tenants to show it to new tenants, things like that. So distance can be both a pro and a con. The final pro is depreciation. With a rental real estate property, you will get depreciation that you can use to offset income generated from other sources. So, from a tax perspective, that can be a benefit. Now, in the cons section, PTSD, that's post traumatic stress disorder. And I say that a little bit laughingly, but it's actually kind of true. I've had a lot of bad experiences with residential rentals and bad tenants. And I guess I've found that I just don't really enjoy it very much. And maybe my disposition does not lend itself to that. So, it's very stressful for me. And that's a big con. Residential real estate typically requires regular, significant effort. A lot of cities have what is called tenant-friendly legislation, which basically means that all of the laws are slanted in favor of tenants and against landlords' rights. So it can make it very difficult as a landlord to evict a tenant who's not paying and just all kinds of other things. So unfortunately, that is the case in most cities. Another con is variable tenant quality. You can have a good tenant. I've heard of those dream tenants that, live there for 10 or 20 years and never raise a fuss and pay their rent on time. And you can raise the rent every year a little bit to keep up with inflation. But in my experience, those are rare and hard to find. More likely, you're going to have a tenant who stays for a year or two and you might have some problems with them. And then occasionally you might have a tenant who is an absolute nightmare. And I've had a couple of those and it is no fun at all. And then the last con has to do with lease duration because it's going to require active management, right? I mean, a lot of tenants are going to be there for a year or two or three, and then you're going to have to look for new tenants. You might also have multiple rental properties, so then you're dealing with multiple tenants and things like that. So a lot more work than some of the other alternatives. So what about triple net commercial real estate, since that was the first thing I was thinking about in terms of what to convert our raw land into? Well, here are some pros. Long-term leases, higher quality corporate tenants, excellent return on investment, a step up in basis for heirs. You'll save on taxes through the 1031 exchange process, and you'll have depreciation to offset other sources of income, just like you would with the residential rentals. In terms of cons, it is less well known, so it's fairly complicated. I was referred to someone who deals with commercial triple net real estate, and he started to educate us, and it was going along pretty well, but it was not insignificant. There was a lot to learn, and because of that, it would have been more risky, right? So we're taking a very significant portion of our net worth and investing that into a type of real estate that we were really not familiar with, we didn't have any experience with. So that's a significant risk, and ultimately one of the reasons we decided not to go that route. And also, there's a higher initial investment minimum. So when you're buying residential rentals, like a home or a duplex, that might cost you few $100,000. But when you're buying commercial triple net real estate, minimums are like over $1 million, to really get into anything significant. So you're dealing with bigger pieces of real estate, more risk sort of consolidated in one asset. Now let's talk about vacation rentals, because ultimately that's what we decided to buy. And first, I'd like to explain why we didn't initially consider a vacation rental purchase and what changed our minds. So when my wife and I were in our 20s, we spent quite a bit of time going to the beach. This was before kids, so we had a lot of freedom. We'd go every couple weekends and explore a new beach. And we got curious about buying a beach property because we were both working, earning decent money. And we thought, this could be kind of cool, get a beach property now while we're young, and then that could turn into something later. But we couldn't get answers about the financials. Nobody would share anything with us. It was all very opaque. And so we kind of came to the conclusions like, well, if they can't share the numbers with us, then the numbers must not work. And we certainly don't want to get into a mess. And what we found is that a couple things. Number one, a lot of the firms out there that are selling rental real estate are also managing rentals. And they are sort of, old-timey and old-fashioned, right? It's not a major metro area. There's something they call beach time, which is, people have sort of a slower pace of life and they do things a little bit differently out there. So we just figured that, okay, I guess vacation rental at the beach is not something we're ever going to invest in, and we weren't thinking about it. But when I was talking to my accountant about this, he had had some experience with several properties at the beach and suggested that we look into it. We were at the beach with some friends and contacted a local real estate company that was new. And it was started by someone who had grown up on the island but wanted to do something different and do it in a more modern way. And we lucked out because they've been fabulous. And they were able to give us financial numbers on these properties and get us comfortable around the prospect. And basically, they were able to show us that if we actually managed it as an investment, which is something a lot of people don't do, then we could get the same type of returns that we could with a commercial triple net property. So we're like weighing the two, and it's like, okay, so we can have this boring, Dollar General sitting out here in the boonies somewhere, or we could have a beach property that is going to be rented during the prime season, during the summer, and some of the off season, but there might also be opportunities when we can go as a family and enjoy it. So that ended up being a factor in the end, since the financials all worked out kind of equal. Now let's break down the pros and cons of owning a vacation rental property. So on the pro side, it's a well-known type of investment. There's a high probability of success, excellent return on investment. There's a step up in basis for your heirs, just like there is with any other type of investment real estate. You can save on taxes through a 1031 exchange. We found a great company to help us with managing the property. Tenants are short term, which actually solves a lot of the headaches that I've had with residential rental tenants. I'll talk a little bit more about that shortly. You have the ability to enjoy it when it's not being rented. And there's depreciation, which you can use to offset income from other sources or income from that rental property itself, which is what we've done. Now, on the con side, vacation areas, typically the real estate markets are very volatile. So they're either like up really high or they're down really low. So you only want to make an investment in one of those areas if you're going to hold it for a very long period of time and have some flexibility. There's a higher initial investment minimum than, say, buying a residential property like an apartment or a duplex. Bye, sweetie. Then there's the distance, which can affect your ability to manage the property. Ours is about 3 hours from our home. Another con is beach time, which I mentioned earlier, and it carries forward into other things. People that you need to help manage your property, vendors, contractors, things like that. So, and I don't want to, disparage anyone, but I do know quite a bit about this because I have some friends who are contractors who have done work at the beach. And what they've told me is that, it's very challenging to work with contractors and vendors who are based there because they are living a different pace of life. And, one gentleman, for example, told me that he was working on a house out at the coast and his plumber, who was supposed to come to work that day, called up and said, I decided I'm going to go fishing today. And that just doesn't happen here in the Triangle, in a major metro area. So what a lot of contractors do is they actually bring vendors and crews from a more major metro area to the coast to perform the work. So that's just to say that beach time can be a factor that can make managing your property a little bit more challenging. In terms of the 1031 tax advantaged savings of this transaction, there is a particular risk that I wanted to point out that really is only pertinent for vacation rentals. The IRS intends this exchange to happen between two like investment properties. And what people have sometimes tried to do is take an investment property and use the tax code and the 1031 exchange to save money on taxes to then buy a personal vacation property, right? So it's like, oh, we own this land and we're going to sell it, and then we're going to buy this house on the lake that we're going to enjoy a lot. Well, that is not the purpose of a 1031 exchange, and the IRS can invalidate that exchange, in which case you would owe massive taxes. So there is a safe harbor, which means that basically the IRS has said, okay, in these certain circumstances, we will not challenge your 1031 exchange. And basically there's a 2-year window after you buy the property that you have to be very careful. So you can't use it for personal use. There's very strict limitations on that. You need to really only be there at the property when you're doing maintenance or managing it in some way. But as long as you follow those restrictions, then after 2 years, you don't have to worry about it anymore. But I did want to make sure that I mentioned that because, the tax savings are significant. And I don't know if we would have made the same decision on what type of asset to invest in, right? Maybe we would have stuck it in the stock market instead if we were going to have to pay the taxes anyway. So it's very important. We were very cautious about it. We were buying this property as an investment. So, we just decided not to use it at all and only went there when we had maintenance to do. And then the last con is that the income, the annual income from your rental property, your vacation rental, is impacted by the economy, right? So when the economy is good, people go on vacations. When the economy is struggling or if we're in recession, then you might get less income from your rental property. So, we did the math to make sure that we were going to be okay either way, but it is something you need to be aware of and be careful of. In terms of me personally, I mentioned I had PTSD from managing rental real estate property, apartments and things like that. So here are the things that made a vacation rental work for me that are different, right? So first off, non-paying tenants. You don't have that with a beach rental. They have to pay in advance. It's very short term, so they can't get behind on rent as you would with a regular residential tenant. Damage. The property, our beach rental, is inspected after every guest, and every guest is required to buy an insurance policy to cover any damages. Very different from a residential real estate property. Eviction. There's no such thing. These are typically 1 week rentals. Occasionally you get someone who rents for 2 consecutive weeks, but it's very rare. So you're never going to get into a situation where you've got a tenant sitting there and not paying rent for months and months and months, have to go to court, get a court order for eviction. Believe me, I've been through those nightmare scenarios. It is no fun. Maintenance and emergencies. When I had residential rentals, sometimes you get a call in the middle of the night or on the weekend or when you're on vacation and somebody's having a problem. The heater stopped working and it's freezing, or the water stopped working and, it's 4th of July and you need to find a plumber or an electrician or a HVAC specialist. Wow, lots of headaches. But in terms of the vacation rentals, I have a management company. So if there's anything that the guest needs, or if there are any maintenance needs while a guest is staying, then the management company deals with it. They just deal with it. They get it done promptly. That is their business. That is what we pay them for. So that is such a relief. It takes all those worries off my shoulders. Wonderful. And finally, you can, as I mentioned earlier, enjoy it yourself. So we've really enjoyed making memories with friends and family at our beach house. That's a great bonus. Now we're to the bonus section that I promised you at the beginning of the video, where I'm going to share with you the keys to success to making a transaction like this work for you, just like it worked for us. Okay, here goes. So number one, you need to do this transaction debt-free. Anytime you have debt, it's going to weigh on you. Do it debt-free. That is so atypical for vacation rentals, especially at the beach. People are always taking on debt. It is absolutely crazy how much debt they'll take on. But I was doing this as part of a strategy to move into retirement and to replace my work income. So I needed the income to get that comfort level with my wife so I could retire. I didn't want to have to be paying a large mortgage and then have the worry of, when the economy dips a little bit and we have less rental income, how am I going to cover the difference with the mortgage, right? So do it debt-free. I can give you a couple examples of how crazy it is. So when we were looking at commercial triple net real estate, of course, these guys selling real estate are always thinking about leverage, because, that way they can sell you more real estate and they can make more profit, but it's really giving you risk. Similarly with the vacation rentals. So we had a house that we were looking at. We decided, to go forward. And there was a second house that we had put an offer on. So we had offers on 2 houses because, as I mentioned, the market was insane, right? We literally would see a property listed, and before it was available for showing, there was already under contract, right? So we were in a situation where, there were properties that were coming up that we said, yep, this meets our criteria. And we would have to put a non-refundable deposit down in order to secure that property. So at one point we had deposits down on 2 properties simultaneously. And we knew we were going to lose $5,000 that we had deposited on one of those 2 properties, but we just had to do it. And considering the size of the transaction, it was a reasonable amount to risk. Well, In terms of leverage, we had made it very clear to the realtor we were working with that this was a cash transaction. We were doing a 1031 exchange, and we wanted a property that was, as close to what we were going to make selling our land as possible, right? We didn't want to put a lot of extra money into this. We didn't want to take out a loan. Well, he came to us at one point and said, "Hey, I was talking to my banker friend, and you have contracts that have been accepted on these two properties. Well, you could actually buy both of them. I had my buddy run the numbers with your finances, and you could actually afford to take out a mortgage and buy both those properties." Well, I was like, "No, thank you. I'd rather have one property debt free." So anyhow, please, please, please do not structure a deal that leverages you too heavily. So much risk in that, right? If you want to be successful financially and with real estate, try and avoid leverage. Now, I realize, because I have the internet too, that there are a lot of people out there who are going to tell you to leverage, 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 that is the secret to success and building wealth quickly. Well, what I always ask myself when I run into those hucksters and snake oil salesmen is, well, if you've got this genius plan for building massive wealth quickly, then why are you trying to get me to buy your program, right? Why aren't you just sitting on a yacht somewhere on your private island enjoying all your massive wealth? So just remember, with all those things, there is risk. And I tell you, peace of mind from minimizing risk, there's no price you can put on that. Okay, other success factors. Treat it as an investment. As I mentioned earlier, most vacation rentals are emotional purchases, right? People say, "Oh, I want to have a house in the mountains or on the lake or at the beach. That's wonderful." And then they rationalize it to themselves as an investment when the numbers don't actually work. So think of it first and foremost as an investment. And if you manage it that way, you will be successful. And there will still be plenty of opportunities when you can use and enjoy your rental property. Another key to success is finding good partners, right? As I mentioned, my accountant was a very good partner in this, in orchestrating the 1031 tax advantaged exchange, in advising me on the type of property to purchase, and helping me analyze the financials. The real estate company and rental management company that we connected with was excellent. They really helped us through the sales process. And as I'm dealing with a realtor who's showing me properties, I was also talking to the gentleman who ran their management side of their business, who had, I don't know, like 20 or 30 years of experience in the industry. So he was able to give me some very realistic information about what I could expect owning this property, income, expenses, etc. So all that really set us at ease, and also made us comfortable that once we had the property, it would be managed successfully and wouldn't be a lot of headaches for us, because again, it was going to be 3 hours away from our home, and that could have been a real nightmare. So that was good. And then finally, my wife and I make a really good partnership in this respect. I might tend to do things a little quicker. I might tend to take a little bit more risk. And she, keeps me grounded and keeps me from doing anything too crazy. So, definitely make sure you have the right partners to make this a productive and successful transaction. Oh, I almost forgot. In the vein of treating this as an investment, it's important when you're looking at a property that you're thinking of it in those terms. Don't walk into a property and say, "Oh, this is lovely. It's going to work great for our family, et cetera, et cetera." You want to know what are the factors that determine how profitable a property is in this particular type of market, whether it's a beachfront or lake or mountains or whatever type of vacation area. And then that is what you want to base your decision on. So we ultimately found a house that had a lot of potential. It was priced right in a very crazy market. And that's how we based our decision. Now, ultimately, it has turned out to be an excellent decision. And we've made enhancements to the property that have both made it more profitable and more enjoyable for our family to use. And finally, another key to success to making this a successful transaction is to take advantage of every legal tax advantage that you can find. So, for example, I mentioned that we engaged in a 1031 tax advantaged exchange. So anything you can do to make this as positive a financial transaction as possible, all the more the better. We've reached the end of today's video, so thanks for watching. Please like and comment on this video. It really helps those YouTube algorithms push my stuff out and share it to more people. And I hope you'll stay tuned because I've got some exciting stuff planned for the other parts of this series. For example, I'm going to talk about how we optimized our beach property for maximum income. And then I'll also talk about some of the worst investments we ever made and how you can survive things like that. So thanks for watching and have a great day.
It's your world and I'm just a squirrel trying to get a nut to move your butt.
Please subscribe now. You know you want to. And why not go nuts and set notifications on so you'll be notified every time I put out new content.